Hey guys, I'm making this video this morning on 6/30/2020 to show you the position that I put on. I made a video a while back or a couple of days ago about the Boeing poor man's covered call, explaining what that was. You can always resort to that video to understand what the poor man's covered call is and basically the strategy and the profit margin of what I'm looking for to get on anywhere from a 45 to 50 day time frame. So I woke up this morning and we had a big move yesterday on Boeing. I think it jumped 15, 20 plus points. And it's basically working in my favor because this long call has now become profit. And remember, this call was bought on 6/23, so about a week ago. And I bought the 110 call. The 95 at the time I bought it for $9,570. And this is a January 22, so 2 years out. And basically what's going to happen is I'm going to sell the contract shorter term against that. And the overall strategic here is to be able to either get away from the asset itself. So simultaneously the TD Ameritrade or the broker will assign me 100 shares at the 110 and then sell them to somebody else at the 205. Now, the spread that you often hear me talk about, that this has to at least break even because I paid $9,500 or $9,570. We'll tack that onto the 110 and it will give us the break even, which should be around the 205.5 or similar, or 205.70. Before this, I sold a couple contracts, got out from underneath them with profit, so now my break even I think is around 203. But it's working in my favor. You look over here, and right now it does not look like it is because we're actually in the whole 187. When this goes up, this will crawl away because this is how much basically the contract is now worth to be able to buy back. So I would lose money. I'm just going to leave this on the table because even if I just let this go all the way up, it can only go so much, and so will this one. Because basically, again, we'll revert back to the theory or the strategy that this will get called away from us, or this will get assigned to us, and this will get called away. That takes care of this price, and then I sold this contract, which I'll automatically get to keep for $1,100. This loss is really the only loss I would take if I wanted to buy this contract back to stay in my position here on the long side, to stay in this 570 day contract. But that's not going to be the case. I would let this go up. Even if this shoots up to 210, 220, whatever, I would probably think about it. I could always assign myself this or exercise this, take control of this asset, and then sell whatever it is at that current moment. So if Boeing, like I said, goes up to 210, 220, I can sell it back. But in the end, this is still going to have to be bought back to cancel out, and it's just going to be way too much, and it's still going to act like a break even no matter what. So if this thing shoots up to 220, it's going to take the difference, and that's what I'll be in the hole. So really, these two assets itself, the 100 shares theoretically, are not even going to be worth my time to stay in. I'm just going to want to focus on the premium that I sold and then rebuy back a longer call. Obviously a little bit higher in the money, such as a 115, 120, 130 strike price, and then I'm going to go out another 570 days and do this all over again. So I just wanted to show you my system this morning, guys, in my 5K fund. This is the one that I went from $5,000 originally and built it up. I think it's now, I would show you, but it shows my account number and all that. It's around 14,000, I do believe. So over 100% profit in merely half the year. So this is what I do. This is the kind of returns that I make. And just to show you the example of what I was looking at, I bought this call for $95.70. Actually, sorry about that. $11.20 is what I got in premium divided by the $95.70. And this is my return just for the 52 days. And actually, I'm already probably up 15% because, like I said, I did sell some premium before this, and then I got to buy it back because Boeing did drop, and then now it's recovered. So about 15% in a little over 2 weeks. And I just wanted to make this video to show you and clarify these negative numbers that some of you guys will see in people's portfolios, because there is this profit and then this one. That's what happens when you do sell premium, and you have to be able to buy it back if you choose to do so. You'd have to take that loss, but we're not going to. So if there's any questions, always drop them down in the comments. If you see this video on YouTube, make sure you like and subscribe and share. And if it's on the investingondemand.com website, drop some comments down below on this video and ask away any questions that you may have. Until then, I'll see you next time.